This is Chapter 4, Discussion Number 4, Government Regulation of Credit and Bankruptcy. Now, the United States Constitution creates that the national government can create laws concerning bankruptcy. It's in Article 1, Section 8. However, the government has created different laws to assist in the obtaining of credit and the loaning of money. One of the acts is called the Truth in Lending Act, which essentially says that the banks have to be honest and they can't slip anything in order to take advantage of customers who may not be completely into all of the banking's little tricks. So customers must be fully aware of the costs and the conditions of borrowing their money. Also, Equal Credit Opportunity Act, that you're not allowed as a bank to discriminate or say no to people based solely on the fact that they are of a different color, that they have a different religion, they came from a different country, or the fact that they're a girl, or that the fact that they're single, or the fact that they might be old. They're not allowed to discriminate based on those ideas. Also, this is just a recent regulation, Fair and Accurate Transaction Act, which means that customers are allowed to get a free copy of their credit report. And so you can, once a year, you are allowed to obtain from one of the 3 different credit agencies a copy of your report so that you can see if that there are loans out there that you didn't know about because perhaps you are a victim of identity theft, or you can find something that perhaps a bank had misplaced on you, a blame for a late payment or failure to pay, and that gives you an opportunity to remedy that citation or that recording, and so therefore you could repair your credit rating. Also, states get involved with the idea of the usury laws. Usury laws are essentially to eliminate giving large interests on loans. Now you say, well, why would people want to go after a high interest loan? That's going to be expensive. Well, this actually stems back to the idea of organized crime and the mobs, where they would either force people to take interest loans, and then high interest rates, if you don't pay, it'll be your kneecap. But usually it was people who were in dire straits, who were doing something illegal, and were trying to get money to complete something illegal. And the usury laws are just another vehicle that the government uses in order to prevent people from taking advantage of other people in time when they are in severe financial crisis. So usury laws generally are about 25%. Some states maybe go as high as 30%, which is an abnormally high interest rate. For example, currently in 2013, bank interest loans are about 4.5%. So that gives you an idea of how ludicrous some of these interest loans might be when and that's where usury laws would get involved. Now, if you don't pay, you might be considering bankruptcy. Bankruptcy is what someone can go to a bankruptcy judge and they say, I can't pay my debts, and therefore I'd like to declare bankruptcy. The judge will ask you to declare all of your finances, all of your possessions. The judge can then make a determination saying, no, you're not declaring bankruptcy, that you can satisfy your debts, you just don't want to pay. Or the judge can come up with a plan and say, this is how you're going to pay everyone back. A lot of times, though, these plans to pay back are not going to be full payments. And then the people that are waiting for their money are going to have to make a decision and essentially say, will I get some money or will I get no money? A lot of these will help you deal with your credit card debt. Companies are the ones who negotiate with these different creditors saying, hey, you either take the smaller payment now or they're going to declare bankruptcy and you'll get nothing. So that's one thing that they can deal with. Now, if you declare bankruptcy, that said, it is guaranteed by the Constitution, and bankruptcy court can, say you sell your stuff in order to get the cash to the people, but importantly, that stays on your credit record for at least 10 years. So if you decide to declare bankruptcy and 6-7 years down the road, you may have your financial house in order and you're living good and living on the straight and narrow, paying all your credit cards, and you go to a bank and you say, I'd like to buy a house, and they're going to see that bankruptcy on your credit report, and they are going to be quite scared of giving you money, and so it's going to severely affect your interest rate. So that's something to consider when you are even considering or have someone else considering the concept of bankruptcy. This concludes discussion number 4, government regulation of credit and bankruptcy. It also concludes chapter 4, going into debt.